Looking to diversify your portfolio beyond US stocks? In this video, we're diving into how to invest in the European stock market, step by step, both in European stocks and ETFs. Note, this isn't about investing in the S&P 500 from Europe. We have a separate video for that. Here, we're focusing on companies and ETFs listed on European exchanges. If you're in Europe, we'll cover the most popular EU-friendly platforms and ETFs. And if you're a US investor and can't find certain European companies on Robinhood, Webull, or Fidelity, don't worry. We'll show you how to gain access via global brokers like Interactive Brokers, or by using ETFs for instant diversification. For more details, please read our article, which you can find in the video description below. Let's get started. The European stock market is a diverse and complex ecosystem with multiple countries, currencies, and regulatory frameworks. Europe isn't one market, it's a whole ecosystem. Unlike the US, Europe's stock exchanges are decentralized, with each country running its own exchange. Some of the biggest ones include Euronext, covering France, Italy, the Netherlands, Portugal, and more. Deutsche Börse, etc. in Germany, London Stock Exchange, LSE, UK. SIX Swiss Exchange, Switzerland. And for broad exposure, the STOXX Europe 600 is your go-to index. As the name implies, with 600 European companies, the index provides extensive and diversified coverage across 17 countries and 11 industries within Europe's developed economies. Think of it as Europe's version of the S&P 500 index. There are also narrower benchmarks like the STOXX 50 or country-specific ones such as the DAX, Germany, or FTSE 100 UK. Here's how Europe breaks down for investors. The EU, 27 countries with efforts towards integration, but still different tax rules and exchanges. The UK, post-Brexit, it's separate. If you're investing in UK stocks, you're dealing with GBP and different regulations. Non-EU markets, like Switzerland, Norway, and Iceland, not in the EU, but still accessible through international brokers. If you're in the US and trying to buy, say, a Dutch company, maybe you've heard of ASML Holding, a Dutch company and key supplier to Nvidia. You might not see it on Robinhood or Webull. Often, they don't support many foreign exchanges. What do? Contact your current broker. Ask if they allow international trading or can enable it for your account. Fidelity, Schwab, E-Trade, and some others have an international desk. Sometimes you have to call to enable it. Open a global trading account. Brokers like Interactive Brokers or TradeStation Global give you direct access to European exchanges. This is usually the easiest solution for non-Europeans wanting true foreign shares. Some big European companies like Nestle or ASML are available in the US as American Depository Receipts, ADRs, so you might buy them just like any US stock. But not all companies have ADRs, especially smaller or newer ones, so that's where a global broker really helps. Alright, let's walk through a real example of buying a stock using Interactive Brokers, one of the leading trading platforms which operates globally. The process would be the same for buying an ETF. This works for both a US investor and a European investor. Step 1. Open your brokerage account and search for the stock. Let's say ASML Holding. Step 2. Select the version listed on Euronext Amsterdam, AEB. Step 3. Choose Stock and click Buy. Step 4. Give your buy order details. Select the number of shares you want to buy, 10 shares in our example. The order type, which we select as limit, which means that we are willing to buy each share up to a specific price, €668.60 in our case. If you select market, you would instantly buy at the best available market price. Then click Preview. Step 5. Analyze all the details before submitting your order. Here you can give a final check before clicking Submit Buy Order, including the commissions paid for the execution of this order. And final step, click Submit Buy Order and wait for your order to be fulfilled. And that's it. You've just bought into a European giant. Not ready to pick individual stocks? No worries. That's where ETFs come in. They offer instant diversification across many European markets. Let's look at some popular broad market ETFs with relatively low fees that track big indices like MSCI Europe and STOXX Europe 600, Amundi STOXX Europe 600 UCITS ETF, or iShares Core MSCI MSCI Europe UCITS ETF. Both invest exclusively in European companies, have a physical replication by the real assets, are accumulating, meaning that it reinvests the dividends in the ETF itself and gives you instant diversification. Here's a comparison side by side. JustETF.com shows at least 26 ETFs that give diversified European exposure. Compare them to see which suits your style. Please note that this website was created for European investors. However, if you're in the US, you can still buy some of these through certain brokers, like Interactive Brokers, or look for US-listed equivalents that track similar European indices, though the ticker symbols may differ. Here are a few popular American equivalent products. Vanguard FTSE Europe ETF, VGK, follows the FTSE Developed Europe Index, large and mid caps. iShares Core MSCI Europe ETF, IEUR, tracks the MSCI Europe Index, around 400 companies. iShares Europe ETF, IEV, S&P Europe 350. And if you're wondering where to invest, both in Europe, the USA, or other region, platforms like Interactive Brokers, XTB, or Trading 212 let you access these markets easily with low fees or even 0% commissions. Check out the links of each broker in the description below. But hold up, before you invest, consider currency risk. Euro versus your local currency can affect returns. This only applies if you live in a non-Eurozone country like the US. Economic shifts. Political events in one country can ripple across Europe. Investing in Europe can give your portfolio global strength. Just make sure you understand the market, pick the right tools, and stay informed. If this helped, give it a thumbs up and subscribe for more global investing tips. Drop your questions in the comments. We're ready to help. See you in the next one.